Hello my dear CA final students who gave your attempt for November 22 exams. So the most awaited suggested answer discussion, so we are going to see in this video. So first of all, I just wanted to share the feedback of the students who appear for the exams. So my God, like really crazily they send me the messages. Sir, really thank you, because of you only we have written well, all these things. It's nothing my effort dear, it's all your effort only. And next thing is that, so I usually tell in the class that this question will definitely come, otherwise this is not IDT paper. So like that one question came, so it's like random only. So but usually that is a major amendment, so that's the reason why they should have tested. If not for November 22 exam, they would have anyhow tested for May 23 exam. So that is one thing. And then I'm really happy that many of you have performed well in your exam. So yes, except for the first question. So that first question in the descriptive part was bit lengthy. So and you said like MCQs also little bit critical, like they gave a question on some project imports, like lease financing in FTP. So like that some critical questions were there, but otherwise MCQs are also easy. And some students said like from the ICI MCQ booklet, so few questions directly has come also. So good, happy to know that. Then even the descriptive paper, so I have tried a lot to get the MCQ paper, but I am in vain. So I am unable to get that MCQ paper. I have searched multiple sources. If you are coming across, you just send me in Telegram. I will discuss that also, but I could not get the MCQ paper like last time. Last time it was fully available, but this time I don't know why, but I could not get it. So if you have, so please share it with me. Definitely I will discuss the answers related to that. Then when it comes to the descriptive paper, see already I have prepared the question suggested answers, so you can see in the description below and you can download that suggested answers also. And so the main overall, if you want me to give the rating, so it is like they, from the difficulty perspective, like in the sense that standard perspective, so they have not tested that much standard. So actually this is a normal question paper only. This is how CA final question paper will be, and this is a normal question paper. This is not a difficult question paper and all, but only thing is that few areas like some 20-30 marks, so is completely new, but majority repeated questions only. Okay, fine. So that this way will the paper be there for May 23 exams? I really don't know. So maybe it could be difficult, but usually what I have observed is that, so May exams also they will focus more on the amendments, because the new Finance Act will be applicable. So there are some considerable amendments as per the new Finance Act and the notifications issued thereunder. So due to that reason, May 23 mostly the questions will be on amendments, and other areas also they can be asking, but some areas really were not at all tested in the exam so far. So this attempt I expected about the e-commerce operator thing, and then even that 9 subsection 4 promoter or builder making inward supply from unregistered person. There are some good areas, but no, those are all not tested. So maybe it will be carried forward to May 23 exam, it could be asked. Fine. So without delaying further, so let's see the suggested answers for November 22 exams. So this is your first question. So I am discussing only the descriptive part. The details of the transactions of J Limited, Vadodara, Gujarat, a registered taxable person during the month of February 2022 are as under. Purchased goods from a manufacturer in Maharashtra as a merchant exporter. So whenever we are making sales to a merchant exporter, we will be charging them 0.1% as GST, and for us it will be treated as inverted tax structure. Now the person who purchases that from us, so by paying 0.1% can take that 0.1% as ITC, and that ITC they can utilize for payment of their liabilities, or they can get the refund under refund of unutilized ITC. And for the supplier it will be treated as inverted tax structure, because we are making purchase but our outward supply is covered under 0.1%. But here we need to see from the perspective of J Limited. So J Limited is making purchases, so from a person as a merchant exporter and exported the same directly to an importer of Spain. So there are purchase as well as sales. On purchases, 0.1% can be taken as ITC. So I have seen some people, so some students, so who were taking a view that there is no purchase price available. So which means that, so how can we take 0.1% of 7 lakhs? Here this is where, so there are two views possible. So ICI can take any assumption. So that's why we should have clearly given our assumption. So assumption number 1, that is view 1. Suppose if you take 7 lakhs, the sale price as the purchase price, being a merchant exporter, then 7 lakhs into 0.1%, 700 can be taken as ITC. Or another view, if there is no information related to the purchases, so we can take the view that, so there is no information related to purchase, so no ITC. So anyway you can take, the difference will be 700 in the answer. Okay. So first I have answered by taking the view that 700 ITC available, but thereafter below I have given the alternative view that what if 700 is not taken, how the answer is going to differ. Okay. So now, so that is with respect to this. So we are just analyzing the transaction wise impact, and thereafter we will see the computation part. And then what about sales? Sales to a person outside India, that will be zero rated supply. So zero rated supply under LUT. Of course it has to be sold under LUT only. There is no other go. That's a condition. So a person who makes purchase as a merchant exporter by paying 0.1%, so he need to make exports not upon payment of IGST. So without payment of IGST under bond or LUT. So that is there. So they have made that. So which means there is no GST on the outward supplies. Okay. Then next. Second, imported goods from China with a CAF value of 5 lakhs. The goods were sold for 5,10,000 as high C sale to the Indian party on 21/2/2022. First we will see the sale. So high C sale before import is excluded from the supply as per 7 subsection 2 read with schedule 3. So therefore this 5,10,000 will not be treated as supply. There is no GST on that, not a supply. Also they are making imports. So will they be able to take ITC? No, because whenever we make high sale by transfer of documents to title, the subsequent buyer will be filing the bill of entry and he will clear the goods by paying customs duty. So therefore that subsequent buyer, so we are making sale to an Indian party, this J Limited is making sale to an Indian party, that Indian party will be able to take the ITC with respect to IGST paid along with customs duty, but not J Limited. So that is about this second transaction. Then number 3, purchased goods from a party in Taiwan, import. Sold the goods to a party in Turkey without bringing the goods to India. So therefore what happens here is that, so purchases outside India, sales outside India, outside the country movement of goods, so that is excluded from supply, that is not going to have any impact on J Limited. Purchase value was 5 lakhs and the sale price was 7 lakhs, let it be. Now J Limited paid sales commission of 50,000 to Mrs. T, their agent, in connection with transaction. The transaction was completed in the 3rd week of February. So here actually there is one exemption. There is an intermediary, and the intermediary here, Mrs. T is the intermediary, getting a commission with respect to supplier of goods outside India. So getting commission with respect to a transaction, and that transaction supplier of goods is outside India, recipient of goods is outside India, that is exempted. This intermediary service is exempted. This exemption is given in IGST Act. So therefore this 50,000 part is actually exempted. Okay. So on that 50,000 there is no GST. Then next, the figures in rupees have been given after conversion through transaction was in convertible foreign currency. That's fine. Then number 4, J Limited has agreed to provide technical services to Mr. K of Ahmedabad, who is an unregistered person. So technical service provided in connection with manufacturing operations to be carried out by him for a consideration of 5 lakhs and has received an advance of 1 lakh for the same on 2nd February. Now, in case of services, GST payable only on advances, GST not payable on entire amount, GST payable on advances in case of services. As 1 lakh is received in the month of February, so on that GST payable, but remaining 4 lakhs GST payable in future as and when the invoice is raised. Okay. Then it has imported raw material from China. CF value of the goods for the purpose of customs included 1 lakh as ocean freight paid by J Limited. The value for the purpose of levy of IGST worked out to be 6 lakhs. Clearance of goods took place on 4/2/2022. Actually, there are 2 points here. First, we are importing the goods. CF value of the goods is 6 lakhs. So, on that 6 lakhs, GST paid for the purpose of IGST, the value under customs is 6 lakhs. So, on that 6 lakhs, whatever GST paid, that can be taken as ITC on import of goods. That is one ITC. Another hidden point is also there, ocean freight. Transportation of goods by vessel from outside India to India, so it will be taxable, and here on that ocean freight GST is payable by the importer of such goods. Okay, so here if you see, it has imported raw material from China and 1 lakh is included in the ocean freight. On that 1 lakh GST payable under RCM by the importer of that goods, that is J Limited. So, J Limited is having an RCM liability with respect to that 1 lakh. Now, so here what is the rate of GST? Actually speaking, the prevailing rate of GST on this ocean freight will be 5%. But as the rates related information is not applicable for exam, so because clearly for CA final exam rates related information is not applicable, so we need to take the rates given in the question. So, if you see, clearly they have given, assume the CGST, SGST rates to be 9% each and IGST to be 18% except supply received as merchant exporter. So, which means even though the applicable rate of GST for this 1 lakh is 5%, but we are taking 18% only, on 6 lakhs also 18%. Then number 6, locally purchased taxable raw material stored in the factory got spoiled due to rainwater in the factory and became unusable. J Limited claimed and received insurance amount of 60,000 for the same. Value of the raw material at the time of receipt was 70,000. See, whenever goods are purchased and destroyed, so it is blocked ITC. So, destroyed for any reason, it is blocked ITC. Suppose if we receive any insurance compensation, this point is already tested. So, this was tested in Jan exam also. So, if any insurance compensation is received, so will that be having an impact? No, that is not having an impact. So, therefore, what will happen here? First, ITC not available. Okay, they received insurance compensation, will that be treated as supply? No. So, that is not a supply. Why it is not a supply? There is no transfer of asset. Suppose if there is any sale for which they receive the insurance compensation, that will be coming. So, here insurance compensation is an indemnity contract. They incurred the loss, so they are getting the money to recover the loss. So, that is not a supply. So, we do not have to take that into value. Even so, 7(1) also does not get attracted in this case. So, on that insurance compensation, there is no GST. Then number 7, company purchased a 3-wheeler having a capacity of 2 passengers including driver, engine capacity 20 cc at a cost of 2,50,000, which is being used for transportation of staff of the company from residence to factory and back. The vehicle was received on 5/2/2022 and the payment was made on the same date. Now, in this case, what we need to see is that generally motor vehicle, so capacity does not exceed 13 and not covered under exceptions. So, it is not used for transportation of passengers, further supply, imparting motor driving skills, then it is a blocked credit. But this is what majority of the students might have taken view. But actually here it is not a motor vehicle, because as per the motor vehicle definition, so motor vehicle definition, so they have given in GST law by referring to Motor Vehicles Act. So, this is the point where really the knowledge on the subject is very, very important. So, when we read the fast track or some revision etc. and all, these points will not be covered. So, yes, even I have also not given these points, so in my every book. So, that's it book, this attempt I gave, because so we had one amendment, section 9 subsection 5. So transportation of passengers by any motor vehicle. Motor vehicle means what? Like that I have given. But so I have covered that in all my books for this attempt, but up to previous attempt I did not give. So therefore, there is always a disadvantage that if you are not reading the regular book or a main book, but depending only on the summary book or some chart book, etc. So definitely you will have the consequences like this. So what I am trying to convey to the students who are listening this video and appearing for May 23, November 23. So study material, see how much ever you may keep some summary book. So but you need to cover the study material. If you are attending my regular batch, anyhow I will be giving the resource book, in that book everything will be covered. But suppose you are not attending any regular batch, you want to buy some books, revision books, or attend some revision classes or fast track batch, etc. Then please refer study material also. So at least few points in study material, like important chapters in study material you should cover. Okay. So this point definitely a student who has gone through the study material or who attended any regular batch, so or any like comprehensive fast track batch kind of, so they will be able to get this point. So 25 cc, not less than, like less than 25 cc, not exceeding 25 cc is not a motor vehicle. Motor vehicle definition excludes that. So which means it is first of all a not a motor vehicle. Not a motor vehicle means, so ITC is available, so it's not a blocked credit. Okay. Then number 8, it has paid inward transportation expense of 30,000 to Mr. Z, a tempo owner who has not issued any consignment note. He has issued a consolidated bill only on 3/2/2022 and the payment was made on 4/2/2022. See, this is also another important point, so which only students who get that thought in the exam they will be able to write. Any transportation of goods by road other than goods transport agency or courier agency is exempted. Who is a goods transport agency? Goods transport agency means any person engaged in transportation of goods by road and issues a consignment note by whatever name called. Here as there is no consignment note, they are not GTA, they are not courier agency, then it will be exempted. Even there is a hidden answer in the question itself, consolidated bill. When they will give bill, invoice will be given only when it is a taxable supply. When it is bill, only in case of exempted supply they will give bill. See the words bill is used, bill of supply, which means that it is exempted. So at least that thought we should have got. So fine, so this is exempted. Actually this is exempted, we don't have to pay any GST on that. Then it has supplied goods of value of 50 lakhs to V Limited, Padra, Gujarat, includes 10 lakhs supplied to SCZ unit of V Limited. So this is a normal sale. Supply to SCZ will be treated as zero rated supply and it will be treated as interstate supply chargeable to IGST. There are two options. Sale to SCZ, there are two options. That is like zero rated supply. So upon payment of IGST or without payment of IGST under bond or LUT. Nowhere there is a reference of bond or LUT. So then sir, what is the assumption we need to take? We need to take the assumption that they are exporting upon payment of IGST. Now you may have another thought. Sir, already in the first question they gave that it is exported under LUT. So then why can't we take the same view here also, sir? No, you cannot take that view because here it is not given that it is supplied to SCZ under LUT. So therefore both the views are there and the correct view, if you ask me, that is upon payment of IGST. So therefore we should charge IGST on this. But I am making a request to ICI so that they should consider both the views and award the marks. Suppose if the student has taken the view that it is exported under LUT, so he should get the marks, and even upon payment of IGST also he should get the marks. That is my recommendation to ICI. And so all these recommendations to ICI wherever there is a possibility of these two. So because what happened recently, ICI has stopped taking information from the faculties. So faculties, if they point out any errors, so that will definitely not be taken by ICI. So therefore I am requesting you on behalf of me, please send with your student, like there is one information that is given by ICI that any student who find any discrepancy in the question paper, so they can definitely mail it to us, like that they have said. So therefore I am requesting the students, so to please check what is the correct mail ID of ICI and send that as there is no information about supplies to SEZ of V Limited under LUT or without LUT. So therefore, they have to consider both the answers, okay, whether it is under LUT or without payment or like upon payment of IGST. But in my answer, I took the view that it is upon payment of IGST. I will give you the supporting reason also, that in some past questions also ICI what they did is that when it is without payment of like GST is not mentioned, like in the sense like LUT is not mentioned, they have taken it as upon payment of IGST in some answers. So due to that reason, so therefore we can take it as upon payment of IGST. Then it has purchased goods from X-Impex Limited, Kadi, Gujarat for use as raw materials in its factory. So they purchased, they imported goods, or they purchased the goods, they purchased the goods from Gujarat, and where they are located. So they are also located in Gujarat, so therefore it is intrastate purchases. The value of the goods is 30 lakhs, invoice dated, so CGST, SGST, ITC is available. It has availed supply of manpower security services from Y Limited. So security agency services. Security agency service will come under RCM if the supplier is other than body corporate. But here the supplier is body corporate, so then it is not covered under RCM, it is under FCM only. So whatever GST paid can be taken as ITC. And assume that the CGST, SGST rates, and there is an opening balance of ITC. In respect of all the inward suppliers, suppliers have uploaded the invoice in GSTR1 and the supplies are reflected in GSTR 2A, 2B. So no issue, we can take that, match rate easy. All the figures are exclusive of GST wherever applicable, work out the admissibility of ITC and GST liability payable. So now, so while giving the marathon, like one day before exam, so I was having a discussion about in marathon, I told you how to present the answer. So this this first question of this 14 marks question, we need to present it in 4 statements. So I also presented this answer in the same format. Statement showing computation of gross GST payable under FCM, statement 1. So statement showing computation of gross GST payable under RCM, statement 2. Then why we need to separate RCM? Because this RCM can be taken as input tax credit, and that input tax credit should not be adjusted with RCM liability, that should be adjusted with FCM liability for that reason. Then statement 3, statement showing computation of input tax credit. And finally statement 4, so statement showing computation of net GST liability. Now, so each and every transaction we need to put it in the respective statements, and finally the net GST liability. So I asked you to prepare one page, one statement. So therefore first one by one transaction we need to put it in the respective places. Purchase goods from a manufacturer in Maharashtra as merchant exporter. This will have, like, first we need to write a note. So in outward supply we need to write that there is no GST because it is export under bond or LUT, and in inward supplies we can take ITC related to that. So it should come in 2 places. First, statement number 1, outward supply value no GST, we need to give the explanation, and then inward supply ITC available with respect to this, so 700, but here there is another view also, no ITC also you can take, but I am taking assumption that 7 lakh is the purchase price, okay. Then second transaction, so import goods from China, so this we will not have any impact, so input tax credit also we will not take, and outward supply also not a supply, but we need to write the note related to this. High C sale to Indian party, no GST because it is not a supply, and even in input tax credit import goods from China, the ITC will be availed by that Indian party but not by J Limited. So that part we need to write because I have clearly given in the question. So please providing supporting explanatory note for your in conclusion wherever required. So we need to give the explanations, that's why. Then next number 3, third transaction. So this third transaction again outward supply, not a supply. So in statement number 1 you need to write that it is not a supply, sale to party in Turkey, okay, and the commission they paid, so that 50,000 commission they paid, on that there is no GST. So if they have paid GST, that can be taken as input tax credit, so that you need to take to the statement 3 that input tax credit, so we have not paid GST with respect to this because of this exemption. Service provided by an intermediary when location of supplier and recipient is outside India is exempted. So under this point it will be exempted. Again, this also please write a mail to ICI so that this portion actually it is exempted. So because of the notification 9/2017 I gave the reference, but ICI may take a view that this 50,000 rupees will be chargeable to GST and ITC is available, so possible. So that's the reason why you just convey this. Then next, so next one, because they are not taking any opinions from the faculties or members of ICI, anyone for that matter, so then the student only should fight. Then number 4, J Limited has agreed to provide technical services to K. So this 1 lakh only outward supply, so that 1 lakh advance CGST, SGST, okay, so only in one place. Then imported materials from China, so here there are 2 adjustments. First, ocean freight 1 lakh on the GST payable under RCM. So in RCM statement we need to take statement 2. So ocean freight and IGST 1 lakh into 18%, 18,000, that's over. And then another part is that this 6 lakhs, on that 6 lakhs, so import, so GST, IGST under customs, not RCM, IGST under customs. So already we would have paid under customs, so don't add it to RCM liability, that is important. Don't add it to RCM liability, already we paid under customs, so don't add it to RCM liability, but we can take the credit, GST credit, ITC we can take 6 lakhs into 18%, 1 lakh 8,000. Then next one, so we have locally purchased material. So this locally purchased material got destroyed. So first of all we cannot take ITC with respect to this, so that we need to write that ITC not available. Then 3-wheeler, so 3-wheeler purchased we can take ITC. So within the state, so 2,50,000, 2,50,000. So here I took the assumption that it is an intrastate supply, because logically, so usually the motor vehicles will be purchased within the state, so that's the reason why I took, but it does not mean that, so always it should be within the state, it can be outside the state, but we can take it as intrastate supply. So 2,50,000 into 9%, 2,50,000 into 9%, they did not specify in the question as to whether it is interstate or intrastate. So here we took the view that it is intrastate. We can also take interstate, the final answer is not going to change based on this, okay. Then next, so in ITC that part is over, the 3-wheeler. Then inward transportation 30,000, so that is exempted actually, so that we need to write that it is exempted. So inward transportation service is exempted other than GTR courier. Then purchase of goods from ex-impex, so 30 lakhs, 9%, 9%. Then manpower supply also GST paid under FCM, so that 9%, 9%. So this is the total ITC, 3,01,500, 3,01,500 and 1,08,700, okay. And there is some opening balance given in the question, 20,000, 20,000 plus GST paid under RCM as per statement 2. This also can be taken as ITC, that is 18,000, 18,000. So this is the total ITC. And in the statement 1, if you do the total, we will get the gross liability 3,69,000, 3,69,000 and 1,80,000. This is to V Limited, SEZ, IGST and other cases within the state. So this is the liability. Now IGST credit should be first utilized for payment of IGST liability. So we are utilizing that, and then CGST for CGST, SGST for SGST. So therefore FCM liability we got and RCM liability we will add. So this is the net GST payable. Suppose if that 700 rupees you are not taking, that 0.1% we paid to merchant exporter as a merchant exporter, if that is not taken, so then the answer will be 47,500, 47,500 and 72,000. 72,000. This is what the first question is. Yes, first question is lengthy and lot of points, because usually it could be like 8 to 9 transactions, but this time, so they have given around some 11 transactions and lot of critical transactions are covered in this. So but this is a very good standard question, and yes, as students said that it is lengthy sir and it is difficult, yes they are right, but from question number 2 onwards this is not the same way, because see, come on, you are a CA final student and at least one question should be of that standard, na? So first question usually will be like that, compulsory question, okay, so that will be like that only. Then question number 2, Ram Company Limited, a registered supplier of Prayagraj, Uttar Pradesh, is a manufacturer of goods. The company provides the following information pertaining to GST paid on inward supply. during the month of April current financial year. So life insurance premium paid by the company for the life insurance cover of factory employees as per the policy of the company, there is no legal obligation to provide insurance cover for employees. So life insurance and health insurance is blocked credit, and we have exceptions. Inward supply, outward supply in the same category, no. And inward supply used for, so inward supply is part of composite or mixed outward supply, no. If it is incurred by employer to employer under a statutory obligation, then also it is available, but that is also not applicable here, and therefore ITC not available in this case on this 1,50,000. In the month of September of previous financial year, RAM Company Limited availed ITC of 2,40,000 on purchase of raw material, which was directly sent to the job worker premises under a challan of 25th September previous financial year. The said raw material has not been received back from the job worker up to 30th April. So yes, job worker, when we are sending, there is a condition that the goods should have been returned within 1 year, but from 25th September of the previous year to April, 30th April, so 1 year is not expired. So which means that, so this case we don't have to reverse any ITC. As on April, we are in the month of April, so we don't have to reverse any ITC with respect to this. Okay, then next, number 2, actually it is not reversal of ITC, it is payment of liability. If the goods are not received within 1 year, so we need to treat it as supply and we need to pay GST along with interest. Okay, but that point is not applicable here, but we need to write the note related to that. Raw material purchase which are used for exempted goods supplied as zero rated supply. This point in the marathon I told. So generally goods are exempted, but the moment when it is exported, it will become zero rated and ITC is available. So therefore 50,000 rupees we can take ITC with respect to this 50,000. These are all GST paid. So we can take works contract service. So this 50,000 rupees we can take ITC. Then next works contract service used for repair of factory building, which is debited in the P&L. So generally works contract service is blocked ITC, but when it is used for repairing the factory building and which is debited to P&L, we can take ITC with respect to this. So this 30,000 rupees also we can take ITC. Then company purchased the capital goods for 4 lakhs and claimed depreciation of 44,800. See, 4 lakhs and 48,000. So 4,48,000 on the 10% is 44,800, which means depreciation is computed on tax component. When depreciation is computed on tax component, we cannot take ITC with respect to that. So therefore here ITC not available. Raw material purchased from Neha Traders 20,000. Invoice of Neha Traders is received in the month of April, but the goods were received in the month of June. So section 16, conditions for availment of ITC. So we need to avail ITC only on receipt basis, only when the goods and services are actually received. But in this case, the goods and services are received in June. We are now computing for the month of April, so we cannot take ITC. Car purchased for making further supply of such car is destroyed in an accident while being used for test drive by potential customers. So this actually in ICI it is there. Okay, study material question only it is. So yes, we cannot take ITC. Why? Because purchased goods, even though for further supply ITC available, but they are destroyed. So another block credit point will come and ITC not available. Goods used for setting up telecommunication towers. Generally construction of immovable property block credit, but plant and machinery is an exception. But plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. So we cannot take ITC. So we can take ITC only with respect to 50,000 and 30,000. All the above inward supplies except serial number 3 above have been used in the manufacture of taxable goods. Okay, so that is why 3, because 3 is used for exempted, that's what they mean to say. And compute the amount of net ITC. The net ITC is 50,000 plus 30,000. So total mistake, it is 80,000 should be taken. So 80,000 is the answer. Okay, and this question is for 9 marks. So actually it is like, you know, to this second question is a cakewalk. So 9 marks easily students will get, because these are all routine points. So there is nothing special, nothing critical, etc. and all. So everything is a simple one and definitely 9. So what happens is that, see, simple, I am just giving you the step marks also. So in the previous question, if you see the 14 marks, so in this 14 marks, so for this, you know, like for this outward supply table, so you can take like 11 points are there now, actually that like that only it will be marks awarded 11 points. So 11 points, 1 mark each. For that 11 points, 1 mark each. And thereafter, for showing the correct answer with respect to computation of net GST payable and for the purpose of showing the RCM liability separately and adjustments, so for that we will be getting some 3 marks. So this is how it will be. So if you are losing, like if you are not taking any 1 point, so then automatically your final answer is wrong, then you deduct some 2 marks, 3 marks for that, and plus 1 mark for each and every point, so 4 marks. If any 1 point is gone, 4 marks you will be losing, okay. And suppose 2 points means that 3 is common and 1 mark plus 1 mark, so 5 marks you will be losing, like that it will be, okay. Whereas in this question, so here we don't have any final computation and all, so therefore 8 points, so like 9 marks will be given for writing the explanation, 1 mark each, and for the total, so they might be giving, so therefore for getting the correct answer 1 mark. So therefore here if any 1 point is gone, then 2 marks you will be losing, okay. Sir, can we trust you, like is it the correct way in which it is evaluated? So I cannot tell this is the only way in which evaluation is done. Before attempt, so I got access to one answer sheet, answer key, because I know one person who is in the review team of answers review team is there. They will be submitting the answers to ICI, so they will be part of review team. So that's that person I know, and that person has told me, he didn't share me also, he told me as to how the step marks will be arrived, and that's how we give recommendations to ICI. But that is not final. Again, ICI may or may not consider that. But when I observe lot of answer sheets, like evaluated answer sheets, what students will be getting certificate copies, in that I have seen, so they will be putting step 1, step 2, step 3, like that circle they will put, and there they will be writing 0.5, 1 mark, like that they will be awarding. So based on that, I understood, okay, this is the way in which evaluation is done. Then, so question number 2B, Mr. X, a chemical manufacturer, imports a machine from Germany on 12 January 2019 for 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows the customs import of goods at concessional rate of duty rules. So this is like completely the student would have blacked out. So but because actually this is a customs question related to import of goods at concessional rate of duty rules. So what some students have done is that, sir, concessional rate is 5%, normal rate is 20%, so they computed 5% on the value 20 lakhs, and they have shown that as customs duty payable. No yaar, no. If that be the question, this is not CA final question, this is will some board exam question. So like that and all, CA will not ask. Actually there is a depreciation point, that is whenever we import the capital goods at concessional rate of duty, so the concessional rate of duty rule says that, rule 7 says that if that capital goods is used and thereafter when it is sold, then depending upon the period of usage, we need to find the depreciation, and the depreciation will be so based on the quarter wise. For every quarter or part thereof, in the first year it will be 4%, for every quarter or part thereof in the second year it will be 3%, for every quarter or part thereof in the third year also it will be 3%, for every quarter or part thereof in the fourth and fifth year it will be 2.5%, and thereafter for every quarter or part thereof it will be 2%. This is how the provisions are given. So now this even in my rocket revision also I discussed, in procedures under customs rocket revision I discussed this point. So in regular batch, fast track batch, I will definitely discuss, even in rocket revision also I have discussed this. And based on this depreciation, we need to compute what is the value of the capital goods, and already we paid 5%, but what we should have paid 20%, so the difference is 15%. That 15% on the depreciated value we need to pay along with interest. But here ignore interest calculation, like that they have us, so we don't have to calculate the interest. Now this is not GST, this is customs, okay. So now what we need to do is that first we need to ascertain what is the value of the capital goods, 20 lakhs, and when it is put to use, so we need to calculate the depreciation based on put to use. So that is also given in the rules. So if you see here, so the period, the depreciation shall be allowed from the date when the imported capital goods have come into use for the purpose specified therein up to the date of its clearance. So, what is the date on which these imported capital goods were put to use? 1st February 2019. And thereafter, on 5th April, X wants to clear the machine for home consumption after having been used. So, for this period, we need to find. And generally in GST, what we did, in GST we took for every quarter or part thereof, means calendar quarter, but here we should not take calendar quarter, here we need to take 3 months as one quarter, because in GST clearly it is given that we need to take 3 months as one quarter, like calendar quarter we need to take. But here it is not given that way, which means that they have specified the period from the use till the time it is cleared on a straight line method. So, which means that we need to calculate 3 months as one quarter. So, February, March, April, one quarter. Okay. So, then 1st February to 31st January, 4 quarters. That is the first year. First year, they did not say first financial year. First year. So, therefore, 4 quarters into 4%, 16%. Then again, second year. So, 1st February to 31st Jan 2021, 4 quarters into 3%, 12%. Then third year, 1st February 2021 to 31st Jan 2022, 4 quarters into 3%, 12%. Okay. Then thereafter in the fourth year, it is 2.5 for every quarter or part thereof. Now 1st February to 5th April, it is not more than 3 months, but we need to take it as full quarter. So 2.5. So total if you see 42.5%. But when you take the calendar quarter, you may get 50%, but that is wrong. So we should not take calendar quarter, we should take this way only. So 20 lakhs into 42.5%, 8,50,000. So 20 lakhs minus 8,50,000, depreciated value will be 11,50,000. So that 11,50,000, on that we need to calculate the differential. What is the differential? Normal duty will be 20 and the concessional is 5. So 15% on that. So 1,72,500, we don't have to add any social welfare surcharge, etc., because they asked only basic customs duty in the question. So in the question, if you see, calculate the basic customs duty payable by Mr. X. So this one depreciation point, if you know, you will be able to arrive at the answer. But again, so when I interacted with many students, they said that we took calendar quarters. No, see that calendar quarters is only for GST. Even another place also we will come across this depreciation kind of concept, that is in duty drawback. In duty drawback, so we will take total customs duty paid minus depending upon the period of usage. So 4% for every quarter or part thereof. There we took period of usage. So like that. So here we should be taking based on the period of usage, and we should not take the calendar quarter. We should take it like 3 months as one quarter in this place, okay, because it is not given. But in GST clearly it is given as we should take it like a calendar quarter basis. Fine. Then don't worry, but so this is a learning experience. Even if you know the depreciation, again how to compute the like customs duty, the depreciation based on 3 months as one quarter, that point you might have missed. So this is one 5 marks question, but a like standard one. So 9 marks they gave easily, and this 5 marks will be a difficult one. And here, sir, suppose if we have not done this, depreciation we calculated correctly, but the quarters we took it like 3 months as one quarter, what will happen? If ICI also takes the view that, you know, calendar quarter, you will get full marks. If the ICI takes the view that it should be like 3 months as one quarter, because see, end of the day, someone will be preparing the answer and give it to the ICI, and ICI will release that as key, and based on that evaluation is getting done. There is no standard here. As there is no standard here, so what will happen is that, so even I am clueless as to how they are going to think, okay. So now you can ask me, sir, you can tell now. So previously they were, now no. So no one should tell, only the student should tell. So therefore, I just gave you this information. So it is how now it reaches them. So it's all in your hands. What can I do? Because the exam was conducted, you know, on 16th, and I took some 3-4 days time. So because I have to get the question paper, get it typed and answers, everything I need to check. So different views. So based on that only I am giving you all these things. Okay. So therefore, So I have released it as soon as possible. Last time and all, I took lot of time in giving the suggested answers. So this time hardly I took 3-4 days maximum. So I am giving you this. Okay, fine. So next one, this third one. So there are only 2 questions in that. So 9 marks and 5 marks over. Then 3. Determine the place of supply for the following independent cases. Festival event, an event management company at Mumbai organizes 2 business promotion events for Prabhu Enterprises registered in Ahmedabad, Gujarat, at New Delhi and Malaysia. Organizing an event. It's a very simple question, 5 marks question, simple question. So in case of organizing an event, what will be taken as place of supply? If both supplier and recipient are located in India, if it is B2B, location of recipient, if it is B2C, location where the event is held. But if you see here, who is the supplier? Festival event, recipient Prabhu Enterprises registered, so B2B, so location of recipient Gujarat will be taken as the place of supply even though the event is held in Delhi and Malaysia, okay, for the 2 marks. Then global planners Jodhpur, Rajasthan is hired by Mr. John, unregistered person based in Kochi, Kerala, to plan and organize his son's wedding in Mumbai, Maharashtra. So what will be the place of supply? So this again, it is to unregistered persons, location where the event is held. As the event is in Maharashtra, Maharashtra will be taken as place of supply. Will your answer be different if the wedding is to take place in Singapore? Yes. In that case, the location of recipient will be taken as a place of supply if the event is held outside India. So that is Kochi, Kerala will be taken as place of supply. So 3 marks. So first one 2 marks, second one 3 marks. So that's 5 marks. Direct, ditto. So just the replica of the provision. And this question, my God, many times I have asked. CA Institute have asked this question multiple times. So this is yet another time. Then XYZ Consultancy, registered in Bengaluru, supplies technical consultancy service to its clients. It has been providing technical services to BA Limited Mumbai since past 2 years. Consideration is settled by BA Limited consignment wise. BA Limited paid 37 lakhs to XYZ Consultancy on 10 January on XYZ Consultancy for agreeing not to provide similar technical service to any other business entity in India or abroad for a period of 8 years. So like a non-compete fees. So consideration for not doing an act. XYZ Consultancy is of the view that 37 lakhs is not chargeable to GST. So you are required to examine the view taken by XYZ Consultancy is valid in law. Calculate GST liability of XYZ Consultancy in case you feel that GST is chargeable. Round off the tax amount if due in accordance with the law. The technical service provided by XYZ Consultancy is otherwise chargeable to GST at 18%. And XYZ have been discharging the GST liability on consultancy charges. It may be noted that BA Limited is not ready to pay any further amount to XYZ Limited in addition to the amount already agreed. So means this 37 lakhs is the full and final amount. First, actually there are multiple provisions that needs to be connected to this. First, we need to see, is it activity for consideration? Is it supply under 7(1)(a)? Yes. So supply involves any activity, such as sale, barter, exchange. So but that is not just activities, any activity for a consideration in the codes or furtherance of business. Then consideration includes any amount received for doing an act or forbearance, not doing an act. So therefore this is activity for consideration, supply. Thereafter as per 7(1)(a), it says that so doing an act, not doing an act, tolerating an act will be coming under supply of service. So finally we can conclude that yes, this 37 lakhs is towards the supply of services and chargeable to GST. We don't have any exemption. And one more reference we need to give, that is as per rule 35 of CGST rules, which says that whenever we are receiving some amount and we are not charging GST separately, the amount so received will be treated as inclusive of GST. So therefore this 37 lakhs will be inclusive of GST. The GST payable will be 5,64,407 rounded off. Again, this is also a simple question only, but if the students have written these explanations and all, they will be getting 4 marks. Suppose if they have written only this, like 37 lakhs will be treated as supply of service, and that is this provision and reference if you write 2 marks, and only this if you have taken, so 2 marks. Okay, in that also if that 37 lakhs you have taken as 18% exclusive of GST, So then you will lose 1 mark. So 1 mark only you will get. Okay. Then KIP Chemical, Ahmedabad, Gujarat supplies goods to ACCP. So about situated in SEZ, Gujarat. Examine with reference to decided case law whether supply is chargeable to export duty under the provisions of Customs Act. It's a ditto study material question. Tirupati Udyog case, Andhra Pradesh High Court case, ditto. So therefore this is a case law, Tirupati Udyog case, wherein it is clearly given that so whenever the sale takes place from DTA to SEZ, it is not treated as export as per Customs Act, and there is no customs duty. Even as per SEZ Act, there is no levy of customs duty, export duty on this. So therefore that case we need to write, and even this case is also given by Gujarat High Court in SR Steel versus UI, maintained by Supreme Court. So actually, even though it is High Court case, but this case went to Supreme Court, and the Supreme Court held that this decision is valid given by the lower court. So which means that it is equal to Supreme Court decision. Like that I said, I have recorded so all study material questions, majority like customs and FTP fully I have done. In GST all important topics I have given, and the remaining I will be uploading. So already it is there in the YouTube channel. So therefore, and I will also amend it for May 23, November 23 exams accordingly wherever is required. So you can just follow that all study material questions. This is study material question. If any student have gone through that, so 5 marks ditto they will be getting. Then next question number 4. So this is about question number 3. Then question number 4, BSA Corporation is a public sector undertaking registered in Karnataka for entertainment events in Bengaluru and at Mumbai. BSA has given contract to Mr. A renowned artist, registered person in Maharashtra, to perform a contemporary Bollywood songs. So BSA Corporation agreed to pay 12,39,000 and 18,29,000 inclusive of GST for Mumbai and Bengaluru events respectively. BSA Corporation seeks your advice regarding the amount of TDS to be deducted. So on TDS one question came. So long due. So it was a long due question and it came. So TDS rate is what? 2%. First of all, we need to understand. So the place of supply is going to impact the TDS. If the location of recipient and place of supply is in 2 different states, so then there is no TDS. So we need to check whether that point is applicable here or not. First of all, artist performing will come under ancillary to organizing an event. So therefore it will come under organizing an event, section 12. Section 12, B2B location of recipient, B2C location where the services are actually performed, that is event, location of event. If the event is outside India, location of recipient. Here, so many students have taken location where services are actually performed. Like that we don't have place of supply in section 12. In 13 only we have, not in 12. So in 12, we need to take organizing an event, location of recipient. Here it is B2B, public sector undertaking registered in Karnataka, B2B. So means location of recipient will be taken as a place of supply. What is the location of recipient? Karnataka. Supplier, Maharashtra. Place of supply, Karnataka. Therefore, TDS is applicable and it is an interstate supply chargeable to IGST. So TDS is deducted 2% on this amount. But there is one important point. While computing TDS, there is an explanation given. While computing the TDS, for the purpose of deduction of tax specified above, the value of supply shall be taken as the amount excluding the central tax, state tax indicated in the invoice. So we need to take out the GST and then compute TDS. I definitely know that students might have messed up this question. First, some students have taken place of supply differently. They answered that there is no TDS. Okay, so that is gone. That is gone. And then, so 1 mark also don't expect, please leave it. Then suppose if you have taken interstate supply chargeable to 2% TDS, but that 2% if you have computed on value including GST, so then you will be losing some 2 marks. So 3 marks only you will be expecting because of writing the provision, etc. So maybe you can expect some 3 marks or 2 marks. So we should take out the GST. Now, clearly it is given 12,39,000 and 18,29,000 including 18%. So take out what is the value? 26 lakhs. So 26 lakhs into 2%, 52,000 will be taken as the TDS. So first we need to write this provision related to 51. So, and who is the notified recipient, etc. So, for this you can get 2 marks, and thereafter BSA corporation, so that explanation for doing that and writing at the answer, you will be getting 3 marks. Okay. Then question number 3b, Kuriana filing station having head office in Faridabad, Haryana has given the details of transactions in a financial year. So these are the transactions. It argues that it does not have taxable turnover crossing the threshold limit of 40 lakhs either at Faridabad, Haryana or Ludhiana, Punjab, and including turnover at Mizoram branch. Therefore, they need not take registration. Actually, this is a inter-level question. Computation of aggregate turnover and whether they are liable to get registered or not. So this question, same question I gave in solved workbook, same question. See, in this I will tell you what are all the questions I covered in solved workbook. 2a I covered, 2a ditto, it is there. So I think 2a, yes, 2a it is there, same. 2b is something which I have not given in solved workbook, but it is an amendment related question. So on this I did not coin any question, this is not there. But 3a is there, 3b is there, okay, TDS related question is there, 3c is there, then 4a is there, second 3b, yes. So this is there, and TDS related question, even this is also there in solved workbook. This is also there in solved workbook, okay. Supply of petrol at Faridabad, Haryana, because many times students will be asking me, sir, should we read all these things? Should we read this much? So at that time I don't have answer, I will say yes pa, you have to read because you need to write the exam now for 100 marks. So at that time students will be saying, is there any way? Because now we are all going into the fast food culture. This fast food culture will be dangerous for health, try to understand. So for that reason I am not telling that always you need to have full meals. So yes, diet food is also good, but the diet food should be quality. So even people who go to the fitness centers, so they will be telling, you should eat, but you need to know what to eat. So good protein rich food you need to eat. So fat food you need to avoid, like that. So qualitative information at least you need to take to the exam hall here. Okay, I am not asking you to read everything and go for the exam, but see, so problems and solutions, there are certain things which you need to. Bare Act you don't read. So analyzing the Bare Act you don't read. Why the provision has come, no need. But at least, okay, this is the provision, this is the application of the provision, that at least we need to have, na? Okay. So supply of petrol at Faridabad, Haryana 14 lakhs. Value of inward supply on which tax is payable on reverse charge basis 11 lakhs. So this 14 lakhs will be taken, and inward supply covered under RCM will not come in aggregate turnover. Supply of transformer oil at Faridabad, Haryana will come. Value of branch transfer from Faridabad, Haryana to Ludhiana, Punjab without any consideration. Transaction between distinct persons. Transaction between distinct persons will also come in aggregate turnover, and this point is enough to say that they are compulsorily required to get registered. Why? See, they are not required to get registered only when their aggregate turnover exceeds threshold limit. Section 24 compulsory registration says interstate supplier of goods, taxable goods, is required to get registered. Okay. So therefore, interstate supplier of goods other than handicrafts, compulsory registration is applicable here. And even they have inward supplies covered under RCM, so definitely they need to compulsorily get registered. Section 9(3), inward supplies covered under RCM, that also compulsory registration. Then value of taxable supplies at Mizoram branch 12,40,000. So therefore this is their aggregate turnover. So the aggregate turnover except that point comes to 31,90,000. And where are they doing business? They are doing business in Punjab, Haryana and Mizoram. So they are doing business in multiple states. One of the state is special category states, Manipur, Mizoram, Tripura, Nagaland. And in that taxable supplies are made. So therefore the applicable limit will be 10 lakhs. But irrespective of that limit, they are compulsorily required to get registered because they are making inward supply under RCM or they are making interstate supplies. So compulsory registration is applicable. So 4 marks. So for doing this computation of aggregate turnover, you may get 2 marks, and for writing about that registration, you will get 2 marks. Then question number 3C. So ditto this one also here, 4C, this one also in our solved workbook, this is there, and this is there even in study material, it is there, this question is there. In my regular batch I have discussed this question also, that is related to rule 4 identical goods. So whenever imported goods, so when we are not able to determine the value, transaction value, then in that case the value will be determined as per customs import of goods duty value rules 2007, and as per these rules, so here as per rule 4, first we need to take identical goods. If identical goods are not available, then similar goods, and then deductive value, computed value, residual value, like that we will get. So first look into this question. Machine Life, an NGO from Indore, Madhya Pradesh, has imported 800 metric tons of food products from Australia for free distribution to needy people in backward area of Sagar, Madhya Pradesh under a central government scheme. So exporter from Australia has charged only $20 to cover cost towards freight, insurance, etc. Means value not ascertainable. So then we need to take identical goods. What is identical goods? Similar imported goods at or about the same time. So having the same physical features and quality, and imported from the same country and from the same producer preferably. So here Customs Department found that at or about the same time of importation, following imports of said food products of Australian origin have been made. So quantity imported 40, 100, 500, 900, 400 and 760. Unit CIF price is given. Discuss the various principles to determine the transaction value of aforesaid transaction under Customs Act 1962 and determine the CIF price that can be considered for assessment in this case. So what should be taken is that in case of identical goods, all these are identical goods, but we need to make some adjustments. Difference in the quantity adjustment should be made, but we don't have any adjustment factor. Difference in the freight and difference in the commercial level we need to make, there is no adjustments, so we can take. But in study material, when this question is given, this one old, very old syllabus CA exam question only, so they have clearly specified that. So compared to this 800 metric tons, this 40 and 100 metric tons are negligible. So due to that reason we should ignore this, but we need to take others as the identical goods. And when we get more than one identical goods, we need to take, so the lowest of such value, what is the lowest of such value? 160 should be taken. So 160 into 800 metric tons, so that will be 1,28,000 will be the assessable value. They did not ask us to compute the customs duty payable, just the assessable value. But here the explanation is very, very important. So first we need to write, so 20 metric ton has been paid only towards freight and insurance. So consequently the value needs to be determined as per rule 4. And rule 4 provides that, so we need to take value of identical goods at or about the same time, and what is the meaning of identical goods. And then we need to write, as far as the quantities are concerned, 40 and 100 cannot be considered as substantially the same quantity, hence remaining 4 should be taken. In that also we need to take the lowest value. If more than one transaction is ascertainable, lowest should be taken. Like that when you write the point, these are the points given in ICA material also, okay. So then you will be expecting 5 marks. Then question number 5, suppose if you just give small information and write down the answer, you may get 3 marks in that question. Then question number 5, so we completed 4 questions, 2 more left. Look into 5th question. Arjun has committed offence under CGST Act, which can be compounded as per the provisions of section 138 of CGST Act. He has been paid the tax amount of 10 lakhs involved in the offence. He wishes to apply to the commissioner for compounding the said offence. You are required to compute the minimum and maximum compounding amount. So this again, many times I said, even rocket revision I covered that what is the minimum maximum amount of compounding. I told with a logic also. 50% of the tags or 10,000, whichever is higher, 3 times you multiply. So 150% of the tax or 30,000, whichever is higher. So that is the compounding fee. Directly they asked 5 marks. First you need to write the provision as to what is the compounding fee amount provision. Then we need to write what is the minimum compounding fee, 5 lakhs, because they have given 10 lakhs. He has paid tax amount of 10 lakhs involved in the offence. So whatever is the tax amount involved in the offence, on that we need to take 50%. So here many students were asking me, why can't we take this 10 lakhs? 5 lakhs as CGST. So that much. No, actually compounding is common for CGST or SGST. Compounding is common. So what is the tax involved in the offence? What is the tax involved in the offence? 10 lakhs. So 10 lakhs into 50%, that is 10 lakhs into 50% or 10,000, whichever is higher, 5 lakhs, maximum 15 lakhs. So that will be the minimum and maximum. Any amount can be fixed by the officer, and that amount once it is paid, because that point also asked, not just the compounding fee. If Arjun pays such compounding amount, what will happen? What are the consequences? All proceedings will not be initiated. If already initiated, it will stand abated. That point if you miss unnecessarily, you will be losing 1 mark. For writing the provision, 2 marks. For doing the computation, 2 marks, and that 1 point is 5 marks. So this is the weightage. Then question number 5b. So this 4 marks question, so this is what I said, definitely it will come, and with this only I started my rocket revision batch, okay, last time. And even in many fast track and regular batch also I told that this will be important, definitely it will come. Comet came off Ahmedabad, handed over goods to transporter Ram Roadways to carry the same from Ahmedabad to Bharuch in Gujarat. The value of the goods is 80,000, which is chargeable to tax at 18% GST, 9% CGST, 9% SGST. And in transit, proper officer intercepted the vehicle under section 68 and seized the goods. Calculate the penalty payable under section 129 for release of the goods. If owner of the goods come forward for payment of penalty, if owner of the goods does not come forward for payment of penalty. See here, when the owner of the goods come forward for payment of penalty, what will be the amount of penalty involved? 200% of tax. 200% of tax. So that will be taken as the penalty. Okay. So 200% of tax will be payable as penalty when the owner is not coming forward. So now what is the tax? The tax here is, see, they are asking section 129 of CGST Act. Section 129 of CGST Act means we need to take only GST liability. GST liability. What is the GST liability? 80,000 into 9%. So that is 7,200 into 200%, that will be 14,400. But students have written 80,000 into 18% into 200%, that is wrong. Okay. Then if owner of the goods does not come forward for payment of penalty, what will be the penalty payable? I said 200% of tax or 50% of value, whichever is higher. Directly we can take 50% also, because already always 50% of the value will be higher. What is 200% of tax? 14,400. What is 50% of value? 40,000. Whichever is higher is what? Whichever is higher is 40,000. That will be taken as the answer. Question did not ask about the payment of penalty for release of conveyance. They asked only for release of goods. For release of goods. So this is the correct answer. 2 marks we will get. Now you may get a doubt, sir, but in RTP they gave different way. So that's what to many students I want to clarify. So sometimes you need to trust the teachers who believe that only one subject they are teaching, so they are dependent on that subject. You should definitely believe them. So many students like asked me, no, you are wrong, you are not telling correctly. See here, we don't have any other work. So this is the only work for us. For you 8 subjects, for me only 1 subject. And so therefore you have to trust, because everything we will read. I am not just taking classes. So I am also into practice, I am also looking into various things. So like research, etc. So definitely you have to trust me. So what happened? So this is a question they gave, ICI gave. And this is the answer. In this question they gave 18% IGST, the value of the goods is 6,80,000. So what if the person is not coming forward, what is the penalty? 50% of the value of goods, that is 6,80,000 into 50%, 3,40,000, and 200% of tax. So because they did give section 129, what is the penalty? Did not specify the act. So 18% IGST, so 200% of tax. So 6,80,000 into 18% into 200% they did. This is what they said, and whichever is higher, 3,40,000. This is what they gave. So but what I said is that first we need to do the penalty separately for CGST, separately for SGST. For CGST it will be 3,40,000, and here it is 6,80,000 into 9% into 200%, that will be 1,22,400, whichever is higher, 3,40,000, like that I said. And this way I discussed even in my rocket revision. Then one student has given me, so this in RTP 129 penalty was different, sir. I gave, they computed without considering IGST. Just based on CGST alone computation is finished. That is wrong. So this is only correct, like that I said. Then CA Institute, they have made the correction at a later point of time. This student did not see. Student will see only the RTP which comes first. But they did the correction. So this is the corrected PDF which they have released. So in that they changed it to CGST SGST 9% and compute the penalty payable under CGST Act. But here before correction they did not ask compute the penalty payable. So here compute the penalty payable under CGST Act. So what is the penalty payable under CGST Act? What I said is correct. That is 50% of 3,40,000, 50% of 6,80,000, 6,80,000 into 9% in 200, whichever is higher, 3,40,000. This is the way we need to arrive at the answer. Trust me, the answer what I have given is correct. So this way only it should be done. But ICI may take as per the old RTP what they have given. That is wrong because they gave 18% GST, 9%, 9%. So means you may take IGST and do. Actually that is wrong. So if they follow their own answer before correction, so you will like that is wrong. Actually this is only correct, and definitely they will follow in the key whatever they have done after the correction. Okay. Next. Question number 5C. Kiara of Indian origin came to India on tour with her baby 1 year. She brought following goods: personal effects 50,000, personal effects 50,000 exempted, no GST, and tour Indian origin, so tourist of Indian origin, so tourist of foreign origin only 15,000 GFA, general fee allowance. For all others it is 50,000. Tourist of foreign origin 15,000. For all others general fee allowance will be 50,000. Personal effects, no GST. Used personal effects of infant, no baggage duty. 50,000 no baggage duty, 10,000 no baggage duty, exempted. New camera, take it and we will get general free allowance. Mobile phone, take it, general free allowance. Cigarettes, up to 100, take it in general free allowance. Beyond 100 only annexure 1, we cannot take it in general free allowance. Wine, this is 2 liters. Wine 2 liters. So this will also be taken in general free allowance. Beyond 2 liters only will not be taken. Travel souvenirs, for a tourist it is exempted. Laptop also exempted for a person more than 18 years. Where is it given, sir? One baby 1 year, definitely more than 18 years there. So otherwise, legally it is not permitted pa. So therefore baby 1 year means more than 18 years. So therefore this is also exempted. And this total 45,000 plus 12,500 plus 1,000. So that will come to 76,500, and we have a general fee allowance of 50,000. We reduce 26,500 on the 38.5%, 10,203. Simple question. Easily you will get 5 marks out of this, and you don't have to write the points. Actually there is no need of any notes to support the conclusions regarding taxability or the taxable amount. So we don't have to write the notes. So just this much if you write, that is sufficient. Just we need to classify as to what are exempted baggage and baggage eligible for general fee allowance minus general fee allowance, we will get this. Okay. So this way every student will score 5 marks in this, no issue. Then question number 6. Actually this attempt, question number 6 we don't have to touch at all, because all questions, like 5 questions what we need to write, so that is pretty easy. So we don't have to touch this question number 6 at all. Okay. So 5 questions, the first 5 questions itself is okay, practical questions. We don't have to touch the theory question at all, but maybe. So let's just see what is the theory question also. Can Mr. Venkat obtain advance ruling for the issue related to place of supply? Generally for the issue related to place of supply, advance ruling is not possible. Also list the issues for which advance ruling can be solved. Usually in class I used to jovially say that you remember all the chapter numbers, chapter names. The chapter names will be nothing but the list of issues up to registration chapter. You need to remember, like that I used to say. Like supply, whether a transaction is supply or not a supply. Okay. Then number 2, like after supply, taxable event, we will be discussing invoice and time of supply. Then we have value of supply, input tax credit, tax liability determination, composition scheme, exemptions, interpretation of exemption notification, registration. Okay. So these are our chapters actually. So the chapter numbers, if they remember, that they will be able to write. So classification, applicability of a notification, that is for exemption, determination of time and value of supply, input tax credit, determination of tax liability, so composition scheme, etc., whether applicant is required to get registered, okay. So, and then whether an activity is supply or not. So, this one, and place of supply is not covered in this list. So, therefore, Mr. Venkat, that is up to registration chapter except place of supply chapter, like that I said. So, place of supply. So, if they have known that, so 4 marks they will get. Then, or another question is there. Mr. Mahindra, a registered person, came to know about QRMP scheme but was unable to make a decision whether to opt for the same or not. Describe the eligibility criteria and benefits of QRMP to help Mr. Mahindra to make a decision regarding the scheme. Same. So, QRMP scheme is an optional return filing scheme and it is not mandatory for whom? For a person whose aggregate turnover during the previous financial year does not exceed 5 crores and they need to make payment in monthly basis through PMT6 challan, and if a person want to opt for QRMP, the last return, that is for the preceding month, should have been filed. Then benefits of QRMP: reduction in compliance because we don't have to file returns on a monthly basis, we need to file returns on a quarterly basis. Reduction in working capital because a fixed percentage only we need to pay as tax. So, therefore, even if there is any difference, there is no interest payable. So, therefore, reduction in working capital. Then B, explain in what cases assessment order passed by a proper officer may be withdrawn in case of summary assessment and best judgment assessment. 2 cases there is a withdrawal of order. One is best judgment assessment for non-filers of return. So, as per section 62, if a person is not filing the returns, a notice will be given in GSTR 3A. After giving notice in GSTR 3A, within 15 days, he need to furnish the returns. If he is not furnishing returns within 15 days, then a best judgment assessment order will be passed. And thereafter, if he furnish the returns within 30 days, and then whatever order that is given will be withdrawn. That is this. Then same way, we have summary assessment. So, summary assessment as per section 64, which says that whenever proper officer is of the opinion that so there is some evasion and delay in passing assessment order may adversely affect the interest of the revenue, then in that case summary assessment order will be passed without even giving notice. But if the person to whom the order is served, if requests to proceed for the regular assessment, so then that assessment order can be withdrawn, okay. So, within 30 days. So, that is about these 2 provisions. Then last, what are the exceptions provided under subsection 2 of section 27 in which refund of duty and interest may be paid to the applicant? So, there are few cases where instead of like consumer welfare fund, there is something called as refund subject to unjust enrichment. Refund subject to unjust enrichment. Refund subject to unjust enrichment means we need to prove that we have not transferred the burden to the next person. If we fail to prove that we have not transferred the burden to the next person, we will not get the refund, the money will go to consumer welfare fund. But we don't have to prove unjust enrichment in few cases. What are they? So, first, imports made by individual for personal purpose. So, that is definitely he will be the person who bear the burden. So, no need to prove when he go for refund. Then, so refund of export duty, there also no need to prove unjust enrichment. Then duty drawback under 74 and 75. Then any person which may be notified so by the government, class of applicants notified by government, and importer, so before order permitting clearance of goods, that is paid excess by the importer before an order permitting clearance of goods for home consumption. Means in the bill of entry itself, clearly it is visible that they have made the excess payment. Then also no need to prove. Or the duty payable is reflected in the reassessed bill of entry. Means in the bill of entry itself, clearly it is visible that they have paid more duty. So then, for example, we imported 200 consignments, but we paid customs duty for 300 consignments. For that 100 consignments, when we pay the customs duty, no need to prove unjust enrichment, because what we have taken delivery is only 200 consignments. With respect to that 100 consignments, we can get the customs duty refund. No need to prove unjust enrichment. That is this point. So with this, we completed the suggested answer discussion. And disclaimer, this is the suggested answers prepared by me, but there might be some slight changes with respect to ICAI suggested answers, but I am confident that these are the correct answers. You can definitely follow this, okay. And thank you for supporting me and trusting me and coming to this extent for writing the exam, and definitely I will keep up your trust on me for the forthcoming batches also. And please convey to your friends that I am starting a new regular batch from December 14th onwards. So there is a new batch that is being commenced, regular batch, evenings. So face to face and online live is there, and the new batch Google Drive recorded lectures will also be available. Suppose if they want to start their preparation early, they can already have done the batch last, like I completed in August month for November 22 and May 23. So they can purchase that video lectures also, and majority of the amendments up to August I have covered. Few more amendments I have not incorporated, so that amendments video will be provided. So by December 1st week I am planning for amendment session for May 23 exams. Okay, so therefore they can purchase that, and if they want to attend the full regular lectures, so they can purchase or they can attend from December 14, and the fast track batch will be from Feb mid onwards. From Feb mid onwards the fast track batch will be. Thank you, and so please stay tuned. Whatever are the changes, updates, etc. I will be giving, and thank you all. Thank you for supporting, and I have observed that many students are not subscribing to the channel. Please subscribe, so that next video when I am posting directly you will be able to get it. So please subscribe, and please recommend me to many of your friends who are all appearing for CA final exams. Thank you all. Take care. Signing off. Bye.